All right, so limit orders. Why are they important? Well, they are the most common order type that we will probably use when trading. And when can we use limit orders? Well, we can use them in the standard market session, which is from 9:30 a.m. to 4 p.m. Eastern Time, or the extended hours session, which is the pre-market and after-hours session. A limit order is your best price. Now, what do I mean by that? Well, let's get into that. So if we're buying, we're specifying with a limit order the highest price that we are willing to pay for the security. And this will execute if we can get that price or less, because it will give you a better price as well. And when you're buying, you want to pay less. And so an example would be if we're buying one share of Apple at $30, that's the order. $30 is our limit, and we're specifying the highest price we're willing to pay for the Apple shares. We're saying to the market, I want it for $30 or better. And since we're buying, better is less, we want to pay less. So that will execute if we can get that $30 price or less than $30. An example of this would be $29.99, $15, $1, etc. Now, let's say we're selling. We're specifying to the market the lowest price we're willing to accept for our shares. And since we're selling, we want a higher price. So this will execute if we can get that price or better, which would be a higher price than our limit. And so an example order would be selling one share of Apple at $100. $100 is our limit, and this is the lowest price we're willing to accept for our shares. So we're saying to the market, I will sell my shares for $100 or more. So this will execute if we can get that $100 price or higher, because higher is better when selling. This could be $100 1 cent, $105, $120, etc. Now, another example for you when buying, if the market price is $100 and we do a buy limit at $90, we're waiting for the market price to drop to $90 before it'll execute, because it has to be 90 or better or less. And instead of 90, let's say we did a limit at $110, then that means we're saying to the market, I will buy for $110 or better. And $100 is better than $110 because it's less. So this order will execute immediately at $100. Now, another example, except for selling this time, if the market price is $100 again, and then let's say we're doing a sell at a limit price of $110, we're saying to the market, I want $110 or better, $110 or more for my shares. So that means this will not execute until the market price hits $110 or higher. It needs to come up in value. Now let's say instead of $110 limit, if we did 90, we're saying to the market, I will accept $90 or better, and $100 is better than 90 when you're selling. So this will execute immediately at $100. Now, if we are looking at a limit day order, that's an order that expires at the end of the trading day if it's not filled or canceled. Something we use often is a good till canceled order, which expires normally 60 to 90 days after the order is placed, depending on the broker-dealer you're using. And we use this often for certain situations when we don't want to have to place orders constantly. This could be if we're waiting for the price of the security to drop before we want to buy it, or if we are waiting for the price to rise before selling our security. So we just place this one order, it lasts 60 days. And just an example of this, we have MCHI. I'm going to place a limit order for you now. This is the iShares China ETF. They closed at $66.13 on Friday, and they last traded almost at $80 in the after-hours session, up $14 from close. That's crazy. And it looks like this guy might have gotten screwed, judging by the bid and the ask here. $66.15, ask $66.94. These are actually limit orders, the bid being the highest limit order to buy and the ask being lowest limit order to sell. I just circled the market depth. You can actually see our order here. This is just a list of the orders in the system. These are all limit orders, people offering a certain price. Now, I'm going to go ahead and pull up this chart here and show you why I'm interested in buying this ETF. So China's been going through it lately, and in the last week they had some regulations come out on certain companies that looks like it might be bad for them. And so the ETF has dropped considerably in the last week from $74 to about $66. So I'm going to use this opportunity, because China is a world power, it's a powerful country. I'll use this to get some international exposure and get some China exposure in my portfolio. And I'm just going to close this here, move that to the side, and go ahead and place this order. So I'm going to click the buy button first, and then I'll change the quantity. And I'm going to do a pre-market order for you to start. So we're going to change that to pre-market. And this will be at a limit. And we will change the limit price here. Just need to think about what I want to do. So the ask is at $66.94. I want to make sure this goes through, and I'm willing to spend $67 on this, so 6 cents more than the ask. So I'm going to go ahead and place this order at $67. And this will give me, 6 cents of breathing room. So basically, we're saying that we want these shares for $67 or less. It'll only go through at $67 or less. And we're going to review the order. If it all looks good, then we will place the order. And mind you, this will expire at the end of the pre-market session if it doesn't fill. So if the price sits at like $68 all morning, this is not going to fill, and it's just going to get canceled. So I'll have to check on it. And if we just maximize the chart here, we can actually see the order sitting there on the chart. Oh, and just notice here, it's 1:44 a.m. So the pre-market's not open yet, so we're not going to see any action yet. It's just going to sit here until there's trading. All right, and so if we hover over here, we see the order, buy 8 MCHI at 67 limit, pre-market, 0 filled. And again, just to reiterate, this will not fill unless when the pre-market opens, I can get a price of $67 or less. Now, if we pull up another one here, we have GXC. It's another Chinese ETF that I'm going to place an order for you, except I'm just going to do it in the standard market session. So we do buy again, change the quantity, smart venue, order type limit again. And then I see the ask here at $110.40. I'm just going to place this order at the ask. And note that we're going to review it. And if it all looks good, we will go ahead and place the order. It looks good to me, so I'll place that. Now, this order is for the standard market session, so trading is not going to start till 9:30 a.m. So this will not execute at least till 9:30 a.m. and will expire at the end of the standard market session if it doesn't fill. Again, we can see the order here sitting on the chart. And here is another one, Coinbase, COIN. This is going to be a sell limit order. I actually have shares of this in my account, disclosure, and we see the bid here. That's a limit order. That's the highest limit order of the highest buyer in the system right now. And the ask is the lowest limit order for sellers. So the person willing to accept the least for their order. Now, the way I'm going to do this is going to be interesting. So when I do this, I'm going to click sell, and I'm going to change the quantity here. I'm just going to do 1 share, and we're going to make sure it's standard market session. And then notice that the limit price, I'm going to do nothing near the current market price. I'm going to do $300. So that means I need the value of the security to go up about $40 before my order will execute. And notice next to the price, you'll see the timing, GTC, good till canceled. That means it'll last 60 days. Now, I just circled those again, just showing the disparity between my limit and the market price. I'm really expecting the price to go to 300 before I'm willing to sell my shares. So this order is just going to sit in the system for 60 days. When you use Schwab, it's 60 days. That's going to sit there for 60 days until the price goes from $257 to $300. And at that point, I'll sell. Now, what's cool is this order, once I place it, I won't have to look at it again. It'll just be in the system, and it might execute without me even knowing if the price skyrockets. So that's what's useful about these good till canceled orders, is we don't have to constantly put new orders in. And so if I delete all that stuff there, just make sure the order looks good before you place it, and then we'll place the order. And now that order's in the system, if you look at the bottom right, and I'm going to expand the chart, and we'll just look at the chart one more time. So if we open that order on the right side, we'll see it's sitting there at $300. If it'll load, okay. Sell 1 share of coin at 300 limit, good till canceled. And now I'm just going to mark the chart up real quick just to show you the difference again. $300 is where the order's at. It's currently at $257. We need it to rise up pretty significantly for this order to go through. Anyway, it was a pleasure teaching you about limit orders today. Please leave a comment with any recommendations or any videos you want me to make. And, of course, subscribe. We appreciate the support.